I'm Doug Levine. I'm a director at Newmark Knight Frank. Newmark is a global commercial real estate services firm with fully integrated platform services that offers solutions on every aspect of owning or occupying a property. I'm here today to introduce this year's panel topic, Modernizing Real Estate and the PropTech Effect. Real estate is the largest asset class in the world with worth more than all stocks and bonds combined. The real estate industry contributes more than $3.5 trillion to the U.S. GDP. Yet is one of the last to adopt technology. However, we have seen the rapid growth in venture investment since 2015. Since 2017, venture capital has invested more than $12.6 billion in real estate technology. Against this backdrop of sweeping change and disruptive opportunity, this panel will discuss the role of technology in modernizing real estate, which components of the value chain can be most improved by technology, and which have the greatest effect on asset valuations. And our moderator, Bill Staniford, a former U.S. Marine Corps cryptologist and real estate technology pioneer. He's the former CEO of PropertyShark and is currently the Chief Product Officer at Compound, a New York City-based real estate asset management and technology company. Bill, I'll hand it over to you.
Thank you very much.
You're welcome.
Good evening, everyone. We've got a lot to cover, so I'm going to hit this thing and hit it hard. I've been doing PropTech since before PropTech was PropTech. I'll start off by saying that. And also, when discussing PropTech, we're going to have to break this into two components. One's residential and one's commercial. Since everybody on this panel is on the commercial side, I'll handle the residential myself. So, in the residential space, basically, everybody's going to try to disrupt and disintermediate the agents and brokers, and they will fail. That is my prediction. And then the other side, the mortgage industry, the residential mortgage industry will be disrupted. And with that, I'm done with residential. Okay, now the area that I love the most is data. Right? So data drives absolutely everything. Artificial intelligence is the future, in my opinion. And every single person on this panel, with maybe the exception of Aaron, uses data on a regular basis. So I'd like to, I'm still correct. And also I'd like to say out of the 90 companies that MetaProp has been invested in, I think I was a part of 2 of those. So that's a pretty good rating. All right, so why don't I start with Sean? Sean, can you just give us an overview of the types of data that you're looking at, how you're using them to inform your decision-making process?
Sure. So as part of an insurance company, we spend a lot of time with data, starting with asset liability management, looking at the liability structure of the firm's balance sheets, looking at the risk factors that kind of are pervasive throughout liability streams, understanding how they map to various risk factors like equity or commodity or fixed income or interest rate. And what we try to do on the asset side is replicate that risk factor mapping so that we don't end up with major asset liability mismatches, and try to optimize in a strategic asset allocation the amount of alpha that you can tolerate and illiquidity that you can tolerate, making sure that you have the liquidity that you need to meet claims as you go. Once you get to a strategic asset allocation, then essentially you have various asset classes that compete for an allocation. And inside of real estate, what we try to do is not just look at it kind of monolithically and pick various assets in all sorts of different locations, but what we try to do is decompose the data that is available in the United States. It actually is pretty rich in the United States as it relates to kind of relatively on a global basis in that we have NCREIF, which cuts across markets and property types, and you could essentially decompose the NCREIF returns since the 1970s and look not just at U.S. real estate, but individual markets and individual property types to try to seek out the types of risk and return that you want to optimize, even in just a simple kind of core real estate portfolio. So I would just say from a data standpoint, we're going at a very, very high level, and even within kind of the U.S. real estate data set, there's a very, very rich body of data that can be optimized from a portfolio construction standpoint, and so that's how we pick markets and assets.
Is there any particular asset classes within the space that you're looking at that you're most interested in?
We invest in the four major asset classes because of the stability of those asset classes and the liquidity of those asset classes. Within the four major food groups of apartment and industrial, retail, and office, we favor apartments and industrial because ours is an income focus. And I think as we're going to talk about, as it relates to a lot of changes that have happened in the office space and maybe some things that are going on in the retail space, there are different types of profiles associated with risk-adjusted returns and the volatility that might be evidenced in some of those asset classes. So we stick with the major four food groups in 20 markets, and if you had to pick among those four for us right now, it's probably apartments and industrial.
Okay, we're going to move on to Eugene and then Thais. I'd like, if you can, just keep it brief. At a high level, what types of data are you using, and to help you inform what decision-making processes?
Sure. We are a young company, and so Knotel has been in operation for about 3 years. During those 3 years, we've been very busy, and so have been building out a portfolio of the 200 buildings that we talked about. To get to that 200 buildings, we have walked and looked at thousands of buildings. We have created basically a pool of data that is internal to us, where we've looked at every floor in the parts of the markets that we're in, understanding the condition of those floors, what they're trading at, and so on. And so we use that information, obviously, to inform where we go, the locations that we decide to act on. A little while back, we bought a small company called 42 Floors. 42 Floors was a listing service, I think, that most brokers had used to put information out and share with their clients and so on. And it's basically, if you type in any address in the world, that's the first site that'll come up for that address. And so buying them allowed us now to access all the information that they've had about millions of buildings and floors in all the different cities and markets that they operate in. And so combining that high-level data along with the very granular transactional data that we've created for ourselves informs where we decide to go, the locations that we decide to pursue. Operating space on behalf of hundreds of different companies also then gives us data and insight into how they're using that space. And so I think traditional owners, when they sign a lease, they get visibility into the four walls, and then inside how the space is actually being used by the companies and the tenants is something that they don't get to see as much. But because we are in close contact with them and looking at how they're using the space, how they ask us to change the space for them, that informs the layouts that we consider and the ways that we build out our spaces.
Thais?
Sure. So I think we look at data in different ways because we are very much vertically integrated. So if you think about it from a landlord side, we look at data to think about where to go. I think that's similar to what you mentioned, so I don't need to repeat it on the acquisition side, and just where to go, what markets, what asset classes. We're not only on the commercial side, but also residential. We look at data in terms of green building. So I know we're going to touch on that afterwards, but we really collect the data in terms of how much energy is being spent, at what times, what peak hours, and how we can optimize that. We look at data for our retail side. So we do use our security cameras really to check how many people are passing through at what times of the day, and like that, be able to inform retailers so that they can optimize that as well. We use data for our amenity spaces to see at what times those spaces are being used and optimize utilities based on that. Cleaning usage, because a lot of those spaces are just not staffed. What I think that is new and very interesting is how we have been using data for Zoe, is our amenity platform, and how we have been using data for Studio, which is our co-working or flexible lease platform. For Zoe, that is not just a platform that all tenants have access to through the app, but also a physical space they can go to. It's really a lounge where we have nap pods, yoga classes, meditation, or just spaces for people to hang out. We collect the data from the tenants, and that's exclusive to the tenants from those buildings. So we collect the data so that we know what are the amenities that are being used, what are the services that are being used, what is the feedback that is being given. And the way we use that data is, one, to optimize those services, but two, to give it back to our tenants. And that's actually been very interesting. Our tenants are really happy to hear that, because now they know, from my employees, I see that I don't know, a huge part of them are actually taking naps in the morning. Maybe the work-life balance is not good. A lot of them are looking for yoga classes. A lot of them are looking for medical services. And that's actually being very helpful. You went beyond, the relationship grew beyond the real estate team to now we are working with the office management and HR teams, and they're using that data. On the studio side, which is our flexible leasing platform, we have been using the data to decide where to add our, very similar to what Eugene mentioned, to decide where to put our co-working locations, where to grow it into, to think about how we design them. We have sensors around the space, so we really use the data to see what spaces are being used the most, what sizes of conference rooms, and like that, and whenever we're going to build the next one, we really use that data to inform how we should build the next one. And we also use the data to manage the air quality. So we have CO2 sensors around the space, and we track how the air quality is, so that if there's something that doesn't seem right, so we can improve it. And the last thing, we use data for pricing. I think that co-working, opposite to our traditional side of the business, allows us to do a bit more dynamic pricing.
Right, data as a value add. So Aaron, if I can ask, what are some of the top companies that are pure data plays that you look at, that you're excited about right now? Or even just general categories of data that gets you excited?
Data is such an integral part of everybody's workflow. You know, we heard a few years ago that folks were building companies based on artificial intelligence or machine learning, and of course now everybody realizes that's got to, processing that data has to be core to every function within every digitally native organization in the new world, right? So the data, to me, is so broadly defined and so applicable to everybody's individual business across the real estate value chain in the future that we're excited about all of it, frankly. Nobody's really nailed it, it seems, you know, from the largest real estate asset managers in the world, insurance companies who are figuring out how to build their own data, capture their own data, integrate with outside data. To
Specific companies that are in the PropTech space that you're excited about?
Well, company that uses a lot of great data today in the PropTech space. I want to give a couple of examples, if I may.
Absolutely.
So, Rod and Dan are here from WorkFrame. Now, when you talk about data from a lease, post-lease, all the way to move-in, construction, and relocation process, usually you're not thinking about big picture data for site selection, relocation, or even CO2. What you're thinking about is decision-making data in the regular workflow of a practitioner in a large organization. That data, believe it or not, in most organizations is totally lost and not optimized to a way and utilized in a way that can be deployed to make better, faster, smarter decisions inside an organization. You would say, hey, Aaron, how is that PropTech? Right? That sounds like, you know, business process automation, workflow automation. Well, I'm not sure that we see a difference between that. So that's one example of what I'm trying to say, is that the data is such a core component. These guys are taking data and activating data that otherwise would have been lost in order to give transparency to every decision maker in the value chain and decision-making process from the time you sign a lease to the time you move into a space and beyond, which is really, really powerful. That data is important, and we back companies that use data for that specific purpose. Of course, there's other companies that have data, I'd like to call out maybe Envelope, one that you know fairly well, that's taking publicly available data and layering other data in order to democratize the development of both commercial, and we do some residential too, by the way, investments in order to make it easier to do the massing and blocking of new developments in large metropolitan areas like New York City. Data is absolutely critical. Is data what their business is based on? Well, yeah, but I think data will be what everybody's business is based on. If you look at Nantum, for example, John, you know, you've been a pioneer thinking about data probably in the built environment, especially in the operations environment, before most people even had heard the word PropTech. You know, I would say that's a data company, even though you might argue that that's an operations business operations and building operations technology, I would say that's a data company, because underlying all of these companies are different sets of data that are critically important to the workflows of the organizations and the individuals who work within them, and developing new ways for us to take advantage of that data and really transform to 21st century digitally native real estate organizations on the enterprise side. So I'd say it runs the whole value chain across every asset type and every geography. Data is a key part of what we invest in.
Right, so I will add on to there. There's a company called Cherry, which I'm sure you're aware of. That is a company that's been aggregating pretty much all data sets and providing it in API format to any businesses ranging from real estate to banks and whatnot. And very strong team over there, and I think they're going to be making a lot of waves in just a pure play data side. So, and again, I'm going to go back to Thais on this one. Obviously, the data is used in many different ways. What steps are you taking to help benefit sort of the green movement or green technology within the PropTech space?
I think I could go on, and I think there's a lot around green tech. One that I think that we have a very strong focus on is in terms of energy management. So, for example, in the US, every single property Tishman Speyer owns is connected to the same platform, so that we can track how much energy not only is being used, but is being used throughout the day. Because one thing that we have seen is it's not the same thing in terms of carbon emissions depending on the time of the day that you're using the technology. You're using cleaner or dirty technology depending on the time of the day, right? So based on that information, we have been able to reduce a lot of our carbon emissions when it comes to the energy usage for air conditionings, for example, by doing what I wrote this down, what's called peak shifting or load shifting. So what we have been implementing are really ice plants inside our properties, so that we really use the energy in the evening. We use the energy at night when the energy is also cheaper and is cleaner. So we use it then to really create those big blocks of ice that then are used throughout the day at the peak hours to generate energy for the properties. So that's really, I would say that's one of the most prominent and one of the latest things we have been doing in the green space to minimize energy usage.
Excellent. And also, Aaron mentioned, that John Gilbert from Rudin is here, and obviously I'm very familiar with the Nantum project that is doing amazing things with energy efficiency. And my next question goes to Sean on this one. Do you, when you're underwriting different buildings or when you're looking for investment opportunities, do you take into account the efficiency that the buildings are being managed at?
We do. We spend a fair bit of time looking at that, and I think just recently we signed up to use this system, Measurable. I don't know if anybody's using this or looking at this, but we have found it to be really rich in terms of its capability, and I've learned a lot just looking at what it's capable of doing. For those that don't know it or use it, you apparently just, when you have these buildings, you sign them up and have them automatically read your utility usage and measure your carbon emission and identify how you're using electricity and how you're using water. And we, in a couple of instances, have found errors that we wouldn't otherwise have found. In one case, just a water pipe having burst and just kind of having an anomaly in the data. But I think more and more there are these types of services that we're using to get better information. Zurich is a signatory to this principle of responsible investment, looking at ways to improve ESG scores and the green scores of our assets. So when we go in and we buy assets, we have another system. Everybody knows Yardi. There's a Swiss system called MetaProp, which is a property management, portfolio management system that essentially has all your tenant data. It has role data, it has financial information, it has a lot of what you'd want from a real estate private equity investment business, but it also has kind of these risk scoring modules, and it has all these ESG scorecards. So we use these scorecards to essentially assign ratings to all of our potential targets and evaluate that in the investment committee process. So it's something we're looking at kind of quantitatively and qualitatively as well.
Thanks. So I'm going to jump to another topic that's pretty hot in PropTech. Modular development is an area of full stack. I'm not sure if you're familiar with that company. Modular construction and being able to really create efficiencies on the building process. One of the companies up here, obviously, Eugene is working for at Knotel, has a different take on modular and actually bringing some of that technology in-house, internally. So, Eugene, if you can explain to the audience exactly what you're doing with modular technology, how you're implementing, and how you see that affecting you going forward in the future.
Sure. So we are not a green tech focused company, but the way that we are contributing is avoiding value destruction. We walk into offices all the time, and you see these beautiful spaces that have been built, and I think most companies, CEOs, founders have been trained to think, okay, what would I do with this space after I rip it out, throw everything here away, and then rebuild it from scratch? And that's just a tremendous amount of waste that is created. And so part of our model really emphasizes keeping intact what we can and reusing what's been built by previous tenants, by owners, and repurposing that to fit our model. And so that's something that we think is really important and will reduce the waste associated with office. We recently rolled out a new product line. In our business, we have companies that are coming to us for office for 2 to 3 years at a time. And the companies that come in one after the other have different needs and uses for the space that they're looking for. And so rather than knocking everything down and then rebuilding it because some company needs more conference rooms and the one coming in after them doesn't, we recently rolled out what we think of as modular furniture, but furniture encompassing rooms and the entire fit out of the space. And so rather than doing a major construction project that requires investment from the owner and so on, we imagine a world where one day we will ship in rooms through the freight. And so when a company says, I'm a sales-heavy organization, I need 10 small rooms for my people to make phone calls from, we'll just ship them in through the freight, assemble them, and they're there to be used. When that company moves on and the company that comes in behind them is not of the same type, we'll just take those rooms apart and move them to another location where they are needed. And so that kind of modularity allows us to repurpose the space within the walls. And so in a traditional format, you're knocking things down, you're destroying things, and then rebuilding them. And for our approach to the space, it's really allowing the physical configurations to be as flexible as we need them to be.
Excellent. And Aaron, going back to you, for both the green tech and the modular spaces, what companies are you interested in, or any thoughts that you have on the future development of these areas?
Modular is a big thesis for us. We've invested in a ton of technologies and entrepreneurs who are using different aspects or will be, whose technologies will be aspects of future modular development in some way, shape, or form. A couple this year, one that's focused on urban infill, modular development, trying to get single-family homes distributed through existing intermodal transportation networks that can be assembled on site in major metropolitan areas for a couple $100,000 for a decent, kind of 4,000 square foot home. It's pretty impressive. But we've also invested in modular furniture-like companies providing quiet focused space inside of common areas of transportation hubs like LaGuardia, one's called Jabberbox, for example. We've invested in companies that do 3D printing, which will eventually be used to modularly print components of the built environment on Mars. I'm not kidding.
Excellent. So I'm going to use an example. I want to talk a little bit about valuation disconnects. And I'm going to use the example of the residential space. The valuation of a company like Compass, which considers itself a technology-enabled brokerage, versus Realogy. And there's a massive disconnect in the valuations between these two companies, one presenting itself as a tech-forward company, the other one is really left in the past, as at least far as valuation goes. And so obviously there's some crossovers into the commercial space, and we have two great examples up on the table right here. We have Tishman and Speyer and Knotel, and obviously there's going to be valuation concerns about how these different companies do, and they're obviously doing completely different things. One's an owner-operator, and one is an operator that may become an owner. And so I'll start with Eugene on this one and then pass it off to Thais to respond. How do you feel that your companies are being valued? Are there differences? Why do you think they should be valued a certain way? And can you guide us?
Sure. So we've raised $160 million over 2 rounds. We are, at our core, a real estate business, tech-enabled, thinking about our offering as a product, and I think that's something unique about the way that we think about our business. And so for us, we do sign leases. We do like to partner with owners to manage the space for them. And the way that we think about what this business eventually becomes is that Knotel will be one of the first brands in office. And so today, if you think about what's happened with the hotels, Marriott, Starwood, they don't necessarily own the bricks anymore, and they're just a brand, an operation that clients and people know will have a nice experience when we go there, and they know what they're going to walk into. And that doesn't really exist in office. With all due respect to Tishman, Speyer, folks who are in real estate, and there are a handful of CEOs outside of real estate who are probably familiar with that name, but my guess is a lot of the companies that people here are investing in, the CEOs of those businesses have never know of any real estate company in a meaningful way. And so the opportunity for Knotel is that we think about those companies, those tenants as our clients, and endeavor to provide them an experience that makes us a part of their real estate solution. That is a little bit disconnected from the performance of the underlying asset and so on, the way that an owner would think about it. And so we really envision ourselves becoming an operator of space on behalf of owners in all the markets that we're in.
Do you have a response?
Thank you. So I agree. It's different. It's completely different. I think that the way we see it, first, valuation is not a thing for us. We're a very private company. But it's more of an integrated platform. Instead of just being able to offer a certain size, a certain type of service, the way we have shifted our business is really to look at a tenant, whatever size it is, from a bank that wants a whole building to a startup that needs a 4-person office, and say, just tell me what you need, and we can provide whatever you need, and we can be here for you as you grow, as you shrink, as you grow into other cities, because our platform is global. So it's really being a global partner for whatever the company is looking for. I think that we did have the concern at first that other than the very large companies, they wouldn't know the name of landlords like Tishman, Speyer, Brookfield, related. Since we launched Studio, it has actually been a very positive surprise. They're like, we like the quality of your buildings, so we love that now you're getting into the service business and really doing offices yourselves. And it's actually been a very positive experience from the co-working space to the multiple full floors that we build and service for them. So I think that there is space for everyone. There are different products and different demands. We have seen the way we position ourselves and we see the value is really by being able to provide whatever the company needs for whatever the term, whatever location, and have everything be under one platform. I think that the other advantage is by being the owner, the operator, and also the one with the relationship with the tenants, is that at times of a crisis, at times when things shift, we don't have the lease obligation in the same way, so we have more flexibility to flex rents up and down without having that liability against us.
And Sean and Aaron, do you guys have any thoughts about difference in valuations and why? Aaron, you want to go?
Sure. A few different answers. One would be, I was with the chief investment officer of one of the biggest real estate asset managers in the world, who said he was really having trouble with his team valuing buildings that were heavily co-worked and had more flexible lease terms, and he felt like that was kind of taking a one-point hit on valuations of those assets from his perspective around the world. If you balance across all markets, I think that's an interesting thought, but maybe a temporary pricing and valuation issue. Another thought I had when listening to this is I don't think a lot of this is unique to us in real estate. I think I was with one of the top financial services fintech entrepreneurs yesterday morning for breakfast, and was talking to me about how their startup, which is maturing, post scale up now has a really profitable business, but they also have a SaaS product that they've created, a B2B SaaS product, and they're talking about splitting the company into two because you're getting 2 to 3 times book for his mature business, and he's going to get 10 to 12 times for 12 months revenue for his SaaS portion of his business. And despite the fact that there's a huge legacy, tremendous scaled up late stage startup business, there's just better reaction to that SaaS multiple today in today's market, and in financial services they're thinking about the same types of things that we're thinking about. I think those are a couple of observations about how some of this stuff is affecting us. I think also we're in the middle of it right now, and it's hard to pull too many lessons out yet. I think 3 or 4 years from now, once the dust settles with a lot of this cultural transition, aging out of the older guard in some of these larger organizations, and the markets tip a little bit from a venture perspective, certainly, but also from a real estate cycle perspective, I think we're have a much better idea of the long-term valuation differences between the different business models that are starting to emerge in real estate tech right now.
So I really didn't want to ask this next question. I fought hard to not ask it. And we're also running short on time, so I'm going to ask everyone to be brief. But in light of what happened in the recent announcement with Facebook coming out with their own cryptocurrency, I feel that blockchain is now just inevitable, and that it's going to be impacting each and every aspect of our life. And so I know there's also 2 companies at a bare minimum that are currently working on blockchain projects up on this panel. So let's start with Thais. If you want to just briefly talk about any initiatives or any thoughts that you have about how blockchain is going to affect us going forward, that'd be great.
Sure. So I think we have been studying blockchain, and there are some initiatives, unfortunately, I can't share, but that we are really working on. But the way that we see blockchain really impacting us is really by, I would say, in different ways. One, if you think about it on the transaction side, by making it easier, cheaper, and just something that we can go beyond the typical investors to invest in a property like the ones we have. I think that beyond that, if we think about leases, it's really about data, making sure that you have more security in terms of the data that you have. If you think about transactions, or even, I know that you are in the insurance space, but as you think about title insurance, if blockchain is something that is really going to be out there, I think that is something that is going to be discussed. Do you still need title insurance? So I would say, in summary, where we see blockchain really coming and playing a big role is really going to be on the trading, on the transaction side, and really in making sure that just data is just safer.
Eugene?
So in negotiating transactions on these 200 buildings, we have a machine that in all the different 8 to 10 cities that we're in now, we have people on the ground who spend an enormous amount of time verifying things and looking at lots of different stacks of paperwork to figure out what's going on with a particular building, a particular floor. There's just a lot of, as everyone knows, kind of opacity in the market, and so that means we spend a lot of time and energy trying to really get to the bottom of things. And if there were an opportunity for us to be able to understand and more quickly and confidently know things about the spaces that we are looking at, that would be helpful for us. And so in the markets where we are active, we have started to create that for ourselves because it's part of the fundamental operation of the business. But I think there is likely an opportunity for us to figure out how we contribute all the information that we're collecting as an operator and make it something where other folks who are in the real estate world are able to quickly verify and understand and act upon the information that we have.
Sean?
I think we've hit it. I think for me, it's title insurance and it's transaction data, and to the extent that this blockchain can come in, I mean, it may replace the title insurance business, and the transaction data would be remarkably valuable. So I think for me, those are the 2 big points.
Aaron, do you think anyone's going to displace the title insurance business as we know it with blockchain? Is that going to happen?
I'm not a title insurance expert, but I can't necessarily sit here and say to the extent that blockchain gets it right what the value proposition for title insurance might be.
I can tell you, title insurance, the margins are something northward of 85% or something like that, right?
Yep.
On the brokerage side. So that's not going to last long. Right, I think we all recognize that. Will it be blockchain that suppresses and condenses that, or something else? I don't know. Blockchain will probably be a part of it. I think certainly title is one place, land registry, a related topic is another, payments is another place where we're going to see this. And in fact, I was also having a same conversation with this spectacular fintech CEO who told me that they're developing, interestingly enough, a consortium-based blockchain foundational, I guess it's a product which is going to replace Equifax and some of the consumer credit scoring. And I think we may see some of that on the commercial side as well, thinking and extrapolating a little bit out where some of the larger folks, whether it be the Rudens and the Speyers and even some of the larger co-working players, all can contribute information in order to better underwrite occupiers of space or users of space. I think that's a really interesting use case for the distributed ledger. I think for sure, and anybody who follows Fred Wilson will know this, that we're talking about machine learning and AI a couple of years ago. A couple of years before that, we're all talking about mobile the same way we're all talking about blockchain right now. It will just be a part of what everybody does and won't be, we're doing blockchain. It will just be the underlying foundation upon which the businesses that are sitting in this room, but a few years from now will be built. But it's still early. We're making, we're early stage investors and we're making very few bets right now in the real estate technology space for blockchain-based organizations, but you're probably the one who knows the most.
Probably.
On this stage. What do you think?
Yeah, so I'm actually personally working on a blockchain project, which I don't talk to most people about. And I also know that there's lots of people in the space that are owners and operators that are working on blockchain projects that they're not talking about. So there's a lot of secrecy around this technology. I do think it's inevitable, and we're not exactly sure how it's going to be used to best make our industry more efficient. And with that, I think a round of applause for our panel.